And also the instructor, Delante, definitely make sure that any questions that you have does not go unanswered. Very genuine, very transparent, and really loves what he does. And that's one thing that I look for in a mentor.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
Now sharing what he's learned with others by hosting courses on investment strategies.
To be able to pass that knowledge on to other people, it makes me feel like, I'm doing something that's valuable in life.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
First thing I want to let y'all know is you can start a trading account with as little as $10, all right? And if you're not greedy and trying to get into this and try to make a whole bunch of money really fast, you would understand that even getting into it with $10, maybe you may not make a lot of money, but you can begin to learn the markets with some skin in the game.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
But what this lesson is about is, like I said, for the working person. You do not have to be in front of the computer to actually participate in the foreign exchange market. Did y'all know that? Did you know you don't have to actually press buttons to participate in the foreign exchange market? You don't always have to be in front of the screen.
This broadcast is brought to you by Bold People Get Rich. For more investing knowledge, be sure to visit www.bpgrinc.com.
Welcome to Markup Mondays, where every Monday at 8 p.m. Eastern Standard Time, we analyze the financial markets, educate the community on trading and investing, discuss world news and popular topics. I'm your host, Delante Brady, Chief Analyst and six-figure earner with Bold People Get Rich, and here are some things you need to know about this broadcast. During the market analysis portion of this call, we often find areas in the market to trade or make our investments. To be updated on these entries, exits, and trade management, make sure you tap the 3 dots on my Facebook page and change following to favorites. This way, you'll never miss an update. To receive investment knowledge, exclusive deals, and updates, click the link tree in my bio and subscribe to our mailing list. If you're viewing this broadcast on YouTube, to be kept up to date, make sure you hit the like button and subscribe. This is an event made for the people, by the people, and we love to hear your feedback and answer your questions during the show. So please feel free to comment as often as you like. Lastly, all forms of investing do involve risk of loss and is not suitable for all investors. Increasing leverage increases risk. Before deciding to trade in any financial market, you should carefully consider your financial objectives, level of experience, and risk appetite. Any opinion, news, research, analysis, price valuation, or other information contained in this video does not constitute investment advice. No person or persons in this video is a financial advisor. All right, welcome. Mic check, 1 2 1 2. If you can hear me, go ahead and drop a 1 inside of the comments and let me know that you can see me, hear me pretty good. Drop a 1 in the comments, and then also let me know where are you calling in from. Where you calling in from? What's your name? What's going on, Liv? Thank you. Appreciate you. Where is everybody calling in from tonight? If this is your first time on Markup Mondays, welcome. I hope you get value from the call. We're going to be going over the financial markets, discussing the world news, what's going on today. I'll also be giving an investment gem of the day. Welcome, Javon. What's going on, Sid? What up, Larry? Welcome. What's going on? I believe Praise Sisters. I don't think that's your name, but that's what's popping up. But welcome. Where's everybody calling in from? Snow is still crazy out there. If you up north, drop a 2 in the chat if you had to drive out on the crazy streets today. Drop a 2 in the chat if you had to drive out. You had to drive out on the roads today. Welcome, Christine from Portland. What's going on? Right, yeah, it's crazy out there. What's going on with street control? What's going on with the plows, y'all? I heard it was like that down there in Akron. It's definitely like that up here in Cleveland. Hopefully they out there getting it together tonight, though. Getting that overtime. All right, we got Akron in the building, Painesville, Ohio. Welcome. All right, Larry said they finally out there. Yeah, it's about time. We needed them earlier, man. We needed them earlier. It was crazy out there. It's nonstop snow, and then tomorrow they talking about it's supposed to be raining, and the rain is gonna turn to ice. So we haven't even seen the worst of it yet. But let's go ahead and get into the call. First things first, we always go over news. You already know we're gonna go through news really quick. It's really not a lot of news as far as like the FX, my FX books and Forex Factory, but I do want to talk about what's going on with the United States, Ukraine, and Russia, and how that could possibly affect the market. So let's go ahead and get into it. First thing we'll get into is the news. You already know I like to check my FX book. So I'm about to share my screen. And for today, everything should be popping right up as soon as I share it. Like, y'all should be seeing my FX book right now, right? Yep. Good. Okay, cool. So for my FX book, as far as EU and the United States goes and red folders, I got the orange folders and the yellow folders turned off. Heavy news. We had heavy news today. It kind of moved the market. It was like a late reaction, but it did end up moving the market. EU pushed up, and then the dollar pushed down. Our next major news release is going to be at 4 o'clock in the morning, and that's going to be for EU. All right, so at 4 o'clock in the morning, we got a red folder news release that's going to provide more than likely some volatility to the market. So as always, just be mindful of that. Just know when volatility is about to enter the market. All right, and then for Wednesday, we got a lot of U.S. news. All right, so at 8:30, 10 o'clock, and then at 2 o'clock in the afternoon, this is a really big one. So at 8:30, we got the
the goods trade balance. At 10 o'clock, we got new home sales. And then at 2 o'clock, we got the Fed interest rate decision. Everybody who trades with me, everybody who has learned how to trade from the same source that I've learned to trade from, y'all know that I'm usually out of the market, or I try to be out of the market by 11 o'clock. That's when I stop trading. I don't place any positions, after that. So with the Fed interest rate decision being at 2 o'clock, like, I'm really hoping that I can get in the market Tuesday morning, or I'm sorry, early Wednesday morning. So sometime during the London session at 2, 3 in the morning. I really want to get in and get out of the market, because I don't want to have anything to do with the New York leading up to the Fed interest rate decision. All right, because there's been a lot of talks about the Federal Reserve hiking interest rates, and that's the one thing that, outside of a unexpected major world event happening, interest rate decision will, cause crazy destruction in the market. I'm talking about, even if you got your stop loss, we talking about slippage. We talking about the market pushing past your stop loss because it jumped past your stop loss. I don't know if anybody's ever experienced that. If you haven't, one day you probably will. I just hope that the loss isn't too bad, but it's something called slippage, where even if you got your stop loss set, if that news release and it jumps past your stop loss, they're going to leave your order open, and actually it'll close out where it skipped to. So it can skip past your stop loss, and wherever it skips to, it's going to take you out there, and that's called slippage. But yeah, trying to be out of the market. So, and that's what I recommend for anybody who is trading anything that's connected to the US dollar. Try to be out of the market before 2 o'clock, even before, the New York. And if you are going to trade the New York, just make sure they in and out trades, because it's really going to be unpredictable. All they've been doing is just talking about the hikes, but they're not saying when they're going to do it. All right. Thursday, we have a lot of red folder news. So we got unemployment rates at 3 o'clock in the morning, consumer confidence at 2 o'clock in the morning. This is all for EU. At 4 o'clock in the morning, we got Bank of Austria manufacturing. And then at 8:30, we just got 6 red folders for the United States dollar. So again, 8:30 in the morning, that's New York session. Just be careful around that time on Thursday. All right. And then on Friday, I don't trade on Friday, but if you do, be wary. 1:30 in the morning until 4 o'clock in the morning, you have EU news with the GDP growth rate. That's also something that is going to move the market a lot. And then you have the United States dollar at 8:30 with personal income, Michigan consumer sentiment, and those are red folders as well. So that is the news outlook for the week as far as trading goes. Now, I want to talk about some things that aren't on my FX book. Drop a 3 in the chat if you're aware of what's going on with the Russians, Ukraine, or Russia, Ukraine, United States, Europe. If you're aware of what's going on with that, drop a 3 in the chat. Welcome, Khalil from Portland. Larry said he loaded clips for Wednesday. I bet on that US 30, on that stock market, and you looking for all sales, ain't you? Well, not all sales, but I'm pretty sure you bearish on the stock market, because that's another thing we're going to talk about. Stock market is selling off like crazy. They said they haven't seen, down movement like this since the .com crash. All right, so nobody dropped anything in the chat. Sydney said a 3-ish, so you know about it a little bit. All right, well, look, guys, this is very important. Like I said, I always say this, I'm not a scaremonger. I just like to be informed on what's going on in the world. I don't I don't just read headlines. Like, I actually read articles. And then I'm like very conscious of the source that I'm getting it from. I read a lot of Reddit. All right, I do a lot on Reddit, because that's the community. That's actually the people. When you get into MSNBC, CNN, it's a lot of political, biasness and, weird stuff going on with that. But there are things that are happening in the world that it don't matter who's reporting on it. Like, these things are happening. So what y'all need to be aware about is Russia and China are allies, right? In a way, like, they cool with each other. China is cool with the US, but not really cool. And I'm pretty sure y'all know what I mean. Like, we do trade with them and things like that, but we're extremely in debt to China. And honestly, China owns us. And I don't really know what's stopping China from just pretty much taking over. But if you've been paying attention over the past couple of years, China and Russia have been doing joint drills, naval drills, like on the coast or outside of the coast of, California on the West Coast. They've been out there running drills. And then there's a supply line, and China has bought a lot of land over here in the United States. And before I get deep into that, right, I just want to give y'all some background on that. So Russia is trying to invade Ukraine, or they are invading Ukraine. The problem with this is Ukraine is an ally of the United States. And so because Russia is starting to invade Ukraine, and Russia and the United States already, I'm not going to say we, but they already don't like each other. And so this is reason for Russia to make a move and do what they've been wanting to do. They are already cool with China. China doesn't really care for us too much. The supply chain disruption, I'm pretty sure China is not, making as much money as they were. I don't see any slowdown on the supply chain, right? The supply chain disruption that's going on. And so they're invading Ukraine, and Biden announced today that they alerted 8,500 American troops to be on standby to possibly be deployed to Ukraine to, meet the resistance of Russia, and that's war. We're already, in my opinion, we're already in war. War is being waged on us. When we talk about World War III, right? I'm not a conspiracy theorist. I just got an extra eye open. I believe war is being waged on us, biochemical warfare. I don't know exactly who's doing it, but the stuff that's going on right now is not natural. It definitely came out of a lab, and something just doesn't feel right about it. And I just really feel like, war is being waged on us. But that's going to be a problem, all right? And that's going to affect the market. So now we're talking about entering into a time that we've never experienced, that I've never experienced as an investor, all right? So this is new waves, new tread for me, new ground for me. I don't know how the market is going to react to China, Russia, Ukraine, United States, Europe, all these countries starting to, go at each other and possibly, go to war. Some ballistic missiles were intercepted over Dubai by the United States. So it's stuff happening and stuff going on right now. Liv said, right. Sydney said, sure. And so with that being said, we just got to be careful, with our investments. We got to consider what we're invested in. If you are a person invested, in the stock market, if it's long term, I'm not saying pull your money out, but speak with your financial advisor and, just be aware of what's going on with that. And then diversify the way that you invest. See, one thing about foreign exchange, foreign exchange isn't going anywhere unless they stop the common person, from trading. But foreign exchange reigns supreme, even still, right now, as I speak, it reigns supreme over everything. It is the best style of investing. You are in control, and if you know what you're doing, you can control the growth of your equity, right? Cryptocurrency, you can trade cryptocurrency, but it's a lot more unpredictable. You invest in cryptocurrency, you got to deal with these major swings, right? And you got to hold on for a long time. You invested in the stock market, now you're talking about slow compound interest. You're talking about slower, which is nothing wrong with that, but that's more so longevity. You got NFTs and the metaverse, and everybody is talking about that, right? Everybody is jumping from this to that. Even with NFTs being out, foreign exchange is still one of the best ways of investing. That's why I'll never get away from it. You're gonna see me. I will not stop talking about foreign exchange. It's not a trend to me. This is not something that I'm just talking about because it was popular at the time. This is what I do. This is what it is. And this is, how we're eating along with other ways of investing. So I just wanted to throw that out there, that also diversify your way of investing. Don't just invest one way. All right. Blake said facts. right? Anybody got to shout out my man Blake, my cousin, my man, my family. Blake is very well versed in cryptocurrency, mining, NFTs. Like if that's something that you're really interested in, make sure you get at that man. His name is Blake Lewis. He just did a live on Friday, I believe, but he does open Q&As. He's very, very, very willing to help. So if you want to get more information on that, he is definitely a trusted source. All right. But let's go ahead. I've been talking for a minute and I've been rambling. Let's go ahead and get into the charts. You know, what's going on, what we got coming up, and then what happened last week. So let me pull out my notes and share the screen. And if it's anything that you want me to go over, go ahead and drop that in the chats. We're going to be reviewing gold, going to be reviewing the Australian dollar versus the US dollar. We're going to be going over EU. And then I'm also going to go into oil because we talked about that before. And I just want to show you guys where it's at. All right. That's NAS. Took a nasty fall. And they talking about the sale is over. But I don't know, man. Depending on what happens over the next couple of days, what unfolds from the situation with Ukraine, Russia, the United States. I don't know about I've been short on the stock market for a while. I mean, that was a really strong drop. I don't really see it recovering from that point. You know, at some point it's got to fall. But first things first, let's go ahead and get into EU and what happened last week. And we actually gonna end up cleaning this chart up too. But last week we were talking about how from the higher time frames we are distributing and how we were looking at this as a pullback, even though at the time it was bullish. We talked about how we retraced to the 50%, almost, the 618, and we were looking for sales last week and looking for it to sell off. And I mean, it really just it was no retest at the top of the consolidation. They just dropped straight back down into the consolidation zone. And right now we're in the lower half of that consolidation zone. But last week I was expecting a buy from where you see this mitigation zone at. And we did end up getting a reaction, but it ended up falling off. And during the week, all of this is everything that we've done inside the Sniper Gang. Like I said, I mark up charts all throughout the week, not just on Monday, because sometimes you have to make adjustments. Things that I see on Monday could change depending on price action, right? I'm still bearish on EU right now. And let's go ahead. We've been looking at this chart for about 3 weeks now. Let's go ahead and do this. Let me make sure y'all can see. Make this full screen. Okay. Let's do this. Let's delete all of that and start fresh. All right. So we already know from the higher time frame, you're not going to spend a lot of time up here because we know that we're distributing right now. Right. So we've had our extension down and we had our pullback and we had a reaction and now we're starting to head down. Right. All right, so understanding this, when we drop down to the lower time frame, and just for good measure, we don't want to forget that we are within the consolidation zone. Let's go ahead and drop down to the lower time frame. We've come back down into the consolidation, and normally I would say, of course, on the way when we created consolidation, once we made this extension down and then started consolidating, that was a consolidation zone. We've come back down into the consolidation zone, but now we have a bias because from the consolidation zone, we came out and we looked at this as a retracement. And so we're looking at this as an extension down, all right? We're expecting EU to continue down and blow out the bottom of the consolidation. All right, so the bias is selling. We do have a lot of liquidity resting below these lows right here. And we're so close, price is so close to this liquidity right now that this is the target. This is what I believe the price is being attracted to and pulled to right now. All right, so we're looking at this from the 4-hour. And you see we got some structure here. We got a low, a high, lower low, lower high, lower low. Right, and what does that tell us? Within bearish market order flow or market order flow, we're expecting it to continue down. All right, these were strong pullbacks, strong pullback, strong pullback. And so now let's drop down to the lower time frame and find an area for an entry. Would not be surprised if we did end up coming back above this high. I always want to take note of higher targets or previous targets. All right, but the first sell zone is going to be here, right? And this is on the 1 hour above these highs. And then second sell zone, I would take near the top of the consolidation zone. All right, so this first sell zone is in between price level 134.11 and 134.50. Let's drop down to the 15-minute and look at some more detail. Yeah, I wouldn't be surprised if they tried to poke back above that. If we possibly get a reaction from here or down here. We're already currently in a sale. Everybody in the sniper gang knows that. And the take profit is down here somewhere. But either way, this will be the second sell zone or the first sell zone, second sell zone above it. And then for the buy zone, I would be expecting a reaction towards the bottom of the consolidation. Why would I be expecting a buy reaction towards the bottom of the consolidation? Can anybody tell me? Anybody know? All right, let's just say, let's do at this small figure. Any of my students know why we would take a buy at the bottom of this higher time frame consolidation? All right, so we got a buy zone right down here around, this is a small figure, institutional level. Yeah. Want to mark that big figure for good measure. All right, so first buy zone is the green box. Second buy zone, I would be expecting a reaction at price level 1.12000. I know these are far targets, but as far as, you know, what could possibly happen tonight, first sell zone is here, and then I wouldn't take another sell until we got back up to this area here. All right, anybody got any questions on EU before we move on? And did anybody, let's see. All right. Javon said multiple touches. Dame said support. Sid said because we would expect it to bounce off of that support because of the bottom of the consolidation may cause a reaction at critical support. All right. So Sydney and LDG, they had it, right? What I really was looking for is that we treat higher time frame consolidation like we treat lower time frame consolidation, or it should behave in the same manner. So if lower time frame consolidation bounces at, it rejects from the top, bounces from the bottom, then on the higher time frame, it's going to be even, an even bigger bounce from that area, right? So that was it. The market is fractal. I just want y'all to remember that the market is fractal, and the same thing that it does on the lower time frames, it does on the higher time frames as well. Liv said the bounce 3 touches. Good. I see you've been studying. Yep. All right, cool. So now let's review some of the pairs that we went over last week. So last week, Dame had me go over gold. And we had a sell zone marked up. And at the time we were looking at gold, it was sitting like, it was probably sitting around like right here. And I was saying that the way that this is set up, even though it follows EU and I was expecting EU to head down, I was saying it doesn't always follow EU. And so the way that this was setting up, these highs right here, I was expecting this to push up before it went down. I said I didn't expect them to leave these highs alone before they decided to head down. And that's exactly what happened. They ended up pushing up, went down to the buy zone, and they went and pushed up beyond the highs. Like, it still blows my mind how you can, like, it's almost obvious to see where the institutions are getting in the market and what they're doing. So that's what's going on with gold. And we're still bearish on gold from where it's at. I'm still expecting gold to fall. It may push up a little more, but I'm really expecting gold to fall from this area. More than likely, we'll get another reaction down here. Once this imbalance gets filled, there may be an opportunity to buy down in this area, but I am expecting gold to sell off. Right, because we got a lot of liquidity to fill. And remember, this is pretty much like a consolidation zone. We've come back near the top. Now it's time to, start falling back down. Last week, we also went over GU. And so what happened with GU, it never reached the sell zone. GU never went up to the sell zone. We did have a buy zone marked up that it came down to, and it went a little below it, but still end up getting a trade out of that, and it still end up buying, right, from that zone. It dropped below it a little bit, came back up into it and gave a buy before it ultimately fell down. Now, what I'm looking at on GU, because GU can be very volatile and make like really volatile moves, and I would not be surprised if they came back for this liquidity. And so I would be expecting a sell from the sell zone that we have marked up. We never reached the sell zone. And so when you mark up sell zones or buy zones, and those buy zones, sell zones never get hit, always keep those, keep that in the back of your mind. If you start with a new chart, if you delete the chart, just make sure you remember where those sell zones were and where those buy zones were, because those are future targets, right? This might not happen for another 2 weeks, but this is still a valid sell zone. So like I said, I wouldn't be surprised if GU came back up here, took out these highs, if some news was released on it, interest rates, whatever, and they pushed up there and took out those highs. And then the last one we went over was AUD, and AUD really moved very well. It hit all of our targets last week. So we came down for the buy, went up for the sell, sold off for 30 pips. Could have definitely got 20 out of that. And then it blew past the first sell zone, hit the second sell zone, and really sold off. So it was 3 sniper entries last week on AUD USD. And as far as what's going on right now, this old buy zone is now a mitigation area. So we're going to flip that purple, and it's doing exactly what we would expect it to do. All right, it's selling off from the mitigation area. So we're expecting this low to get taken out. And then from the higher time frame, we got this low right here. All right, but I would be targeting this low here. Targeting this low. I am bearish on the Australian dollar. All right, now let's go ahead and get into what's going on, Lynn. Welcome to the call. Welcome to the call. If this is your first time here, welcome. Now let's go ahead and get into the educational gem of the day. One of my students brought something up to me last week that forced me to, teach something that I should have been teaching, because it's something that's very important. But a trading routine. How many of you guys out there have a trading routine? Drop a 5 if you have a trading routine. Drop a 6 if you don't have a trading routine, or if you don't know what a trading routine is, just drop a question mark. All right, I just want to, sift through the crowd and see where everybody is at in their trading journey and in their trading career. All right, so we got a 6. We got a 5. Okay, so coming in. Okay. All right. Well, let's. Hey, man, Sydney is funny, man. This dude, he said 5-ish. What's up with you in this ish, man? But let's go ahead and get into what a trading routine is, because it's very important. It's one of those things. It's one of those key things that you might be missing that could help, improve your trading. So a trading routine is exactly what it sounds like. It's a routine. All right. So you think about your daily life. We are creatures of habit, and things work better for us when we have a routine. If you have a job, you wake up at a certain time, you want to be out of the house by a certain time. And on your way out the house, you might grab a coffee, or on your way to work, you always grab a coffee from Dunkin' Donuts. Like, it's part of your routine. And when you build this routine and this routine works, if you miss a step, you can feel it and you understand, what's going on. And maybe why your day didn't go so good is because your routine got broke. You think about basketball players, they have a routine when they go up to the, the free throw line. They might bounce the ball 2 times, do a little shimmy, and then shoot. That's because the end result, for whatever reason, what they did before, it is proven to them to give them a better end result. And so it's the same thing with the trading routine, right? Same thing with the trading routine. So what I want to do is give you guys a basic trading routine. All right, this is for anybody who practices basic trading, breaking retests, breakouts, the retail strategies, basic trading. This is a simple routine that you can follow to make sure you covering most of your grounds before you place your trade entry. And the point of this routine is to arrive at a point where you know where you want to get into the market, and you know exactly what you want to do, and you got everything figured out. Because a lot of people's problem, they'd be like, I really don't know, when to get into the market, or like why I'm getting into the market. So I'm about to give y'all a routine. All right, let me find this. All right, here we go. All right, so here's a routine, right? And you can go ahead, you can screenshot this, you can take a picture, or you can use it as a blueprint. Right? You can use it as a foundation to build your own routine around how you trade. Okay, but here's the foundation. The first thing that you should always check is news. All right, I'll show you guys that with Markup Mondays. You always want to know what the outlook is, what the weather forecast is for the market for the upcoming week. And then you also want to check it every day. You do it for the week to get an overall view. And then once you start trading, you got to look again, right? You got to look again and make sure you understand what's happening during the time that you're about to be trading. So number one is news, right? And then two is HTF, which stands for higher time frame directional bias. So on the pair that you're trading, what is your directional bias from the 4 hour, right? The daily, the weekly. What is it saying? Is it selling? Is it consolidating? Is it buying? Because remember, higher time frame support and resistance, higher time frame momentum trumps lower time frame support and resistance and lower time frame momentum. All right. Number three, what is the lower time frame directional bias? Because just because we're selling, on the higher time frame, we may be in a situation where we're buying on the lower time frame, and you want to be aware of that too. Number four, are you looking to enter on an extension or a pullback? All right. So now we're going through the thought process, the psychology. Are you looking to enter on an extension or a pullback? So what do I mean by that? Usually, if you're looking to enter on an extension, then that means that you're trying to buy beyond the high, and you believe you're a breakout trader. So you believe if it breaks this high, then it's going to continue buying up. So that would be buying an extension. Or if it breaks below this low, then it's going to continue selling. So that would be selling the extension. All right, now buying or selling a pullback, that's if I was to believe that this is downtrending, then I would be looking at this as the pullback, and I would be getting in for the sell here. This is what most traders are afraid of who just started trading. People are afraid to go against the market. When people see the market going in a certain direction, if they see it going down, then they want to sell. All right, when really you want to be buying the market, or you want to be selling the market when it's coming up, and you want to be buying the market when it's headed down. All right, you just got to learn how to catch those support and resistances. But that's my preferred way of trading, is buying like pullbacks. But if you are a breakout trader, that is something that you want to know. You want to know if you're buying, buying or selling a pullback, or buying or selling an extension. Now, number five, if it is a pullback that you're looking for, what percent and is there technical validation for your entry? What do I mean by what percent? So if I'm buying a pullback, what percent of the fib am I looking to sell the pullback? If I'm selling this pullback here, I measure from the high to the low. Do I want to enter at the 38%, the 50%, the 618? It's up to me to make that decision so that when price reaches that area, I can make a sound decision, and I don't have to hesitate or be afraid to enter the market because I made this decision 24 hours ago. I made this decision 24 hours ago that I was going to sell at 50%. And so I'm waiting on this to happen. And once it gets there, it's not even going to be a thought. I'm just going to get right in, right? It's a part of psychology. If an extension, what percent? Again, so if I see the market going beyond this high right here, then I want to find out what the extension is going to be. And so I pull from the high to the low, and these lines up top are going to be the extension. So am I going to take my profits at 127%, 1618, right? Where do I see it going to? And then I want to look to the left. So what validates that entry? Well, over here to the left, I see we have, or what validates me taking profit? Over here, I see we have some support, some previous support, and that's right around the 127. And so once we get close to this area, I think I'm gonna take profit because it may reject from that point. And so I'll just get in on a pullback, but I'm gonna take my profit around that point. Not only do I have 127, also have some valid previous support over here, right? So validate your entry. Now, 7, do you have targets for your TPs and stop losses? So before you enter a trade, I teach my students that you should always know where your take profit and your stop loss is at. Because if you don't, you're trading like an amateur, and you're trading with emotions, and that's how your account is going to get blown. Before you hit sell or enter or sell or buy, you should always know exactly where your target or where your exit is at, and then where your cutoff or where your stop loss is at. Right? I know people can't stand stop losses because when stop losses get hit, you lose money, but that is a part of the game. And I really encourage you to train yourself to accept that. All right, but stop losses is going to stop you from losing a lot of money. Number 8, is it at least a 1-to-1 ratio? So are you risking at least an equal amount of what you're willing to gain? Or are you willing to gain or trying to gain at least equal to what you're willing to lose? So if I have a 20 pip stop loss, I should have at least a 20 pip take profit. Now, if I have a 50 pip stop loss, but I'm going for 20 pips, that's a bad risk to reward ratio. And what that's going to do is show up in your equity over time. Because if you don't have a high winning percentage, and even with a high winning percentage, you still might end up losing money. You're losing more money than what you're willing to gain. And you don't want to find yourself in that position. It's a false sense of security to believe because you have a wider stop loss that you're not going to lose that trade or you're not going to get stopped out early. I'm telling y'all, 1-to-1 ratio at a minimum. So always be going for what you're willing to lose or more. Now, number 9, are you okay with what you would lose? This is another psychology thing. Got to be okay with what you're willing to lose. Number 10, is it within your trading window? So what times do you trade? And if you don't have a trading window, you need to get organized and have a certain time period that you trade, and you don't place trades outside of that window. And then if everything is all good, number 11, take the trade. All right. All right. So did everybody get that? Did everybody get value from that? James said, been on the call on Facebook, but Facebook jail, so couldn't comment. Got you. But YouTube showing you love though, right? All right, cool. If you got value from that, go ahead and drop flames in the chat. And now we're going to go ahead and get into the news briefing. This is one of my favorite parts of the call now. So let's go ahead and get into the news brief.
It's not checkers in the Last week, Microsoft with Xbox let the world know they were playing chess, not checkers, in the $68 million acquisition of Activision Blizzard, a well-known American video game publisher in the video gaming world. Before the acquisition, Activision was partnered with Sony, famous for their PlayStation gaming consoles. The move comes as a huge shock to the gaming world because of the ongoing rivalry between Xbox and PlayStation. Right now, the PS5 is the more popular console, leading the Xbox Series X in number of units sold worldwide by more than 5 million units. We'll more than likely see a decrease in that gap with this recent move by Microsoft, because Activision Blizzard is the birthplace for a lot of iconic titles like Call of Duty, Diablo, Tony Hawk's Pro Skater, Crash Bandicoot, Candy Crush, the list goes on. Microsoft could make some of these titles exclusive to the Xbox console, causing more PS5 fans to want to purchase the Xbox Series X. Sounds to me like now is a good time to be getting rid of Sony stock and buying Microsoft. You know it's getting bad out here when the cruise line can't pay its fuel bill. This past weekend, Crystal Cruises diverted their ship's route to the Bahamas after being issued an arrest warrant for a $1.2 million unpaid fuel bill. The ship and its 700 passengers were originally scheduled to dock in Miami, where the ship would have been seized as collateral for the $1.2 million debt. But check this out. The passengers had to reschedule flights and catch a ferry into Fort Lauderdale to get home. Imagine that. There is no word on if Crystal Cruises plan on docking in Miami anytime soon or paying back what they owe. The supply chain was already experiencing disruption. but it just got more disrupted. Trains with shipping containers are being looted day and night in Los Angeles, Lincoln Heights, causing millions of dollars in losses and thousands of people wondering where their packages are. Witnesses say teams of men can be seen at all hours of the day working together to break into shipping containers and load stolen merchandise into trucks and vans. With no way to know what's in the shipping containers, they throw out anything that isn't valuable to them, leaving the railroad tracks littered with merchandise that will never make it to its destination. Some of these items aren't just material items for customers, but they are face masks, IVs, and other medical supplies that are being lost, stolen, or damaged in these train thefts. California's officials don't seem to know what to do about the situation. So far, higher fences, more patrol units, and harsher sentences have been brought up as ways to discourage train thefts. But as times get worse and America's societal structure continues to break down, I doubt even that will stop the lootings. It's no doubt about it, social media has sickened people's minds so much that they will do anything now to go viral, even if it means recording serious harm or death to others, or even serious harm or death to themselves. So this news brief is dedicated to raising awareness on the mental illness social media causes and will be called SMMIA, or the Social Media Mental Illness Award. And this week's SMMIA goes to this man right here. So I come across this video while casually scrolling my Facebook feed of this guy pointing a paintball gun directly at his face. I said surely he couldn't be thinking about pulling the trigger of this paintball gun at point blank range, which is pointed at his face, that shoots out plastic balls at a velocity of 250 feet per second that can break or bruise skin from yards away. Like, this really is not, it's not about to happen. And that just happened. This video currently has 4,700 likes, 6,100 comments, and 1.5 million views. And I mean, all it cost him was extreme pain and loss of a permanent tooth.
Oh my God, my tooth. Oh my God.
All right, y'all. So that wraps it up for this week's news brief. We got Xbox or Microsoft just purchased Blizzard, Activision Blizzard, and anybody who's like a gaming nerd, you know, that's like huge. They got all these games. Like, it's been a rivalry between Xbox and PlayStation for a long time now, and I believe Xbox is about to go ahead and win that. But yeah, that's crazy. And then with the supply chain, what's going on in Los Angeles, not only is it happening with trains, it's happening with like Walgreens and grocery stores. Like, people are not talking about it on national news, but people are like walking into stores and just like they stealing and just walking out casually. Like, it's nothing. You know what I'm saying? It's nothing. It's gotten that bad. And if you ever been out to California and you paid attention, you know, that's one of the worst places for poverty. The second worst place that I seen like with my own eyes was like downtown Atlanta. But you know, that's to be expected over there, and I don't see it getting any better anytime soon. And then as far as the whole social media mental illness awareness, like, I know the video was funny, y'all, but man, it's a serious, social media is causing a serious issue with mental health. Like, people are really, it's so many, just so many bad things going on with mental health when it comes to social media. And I'm pretty sure, Angel, a major in psychology, I believe, I'm pretty sure you could touch on a lot of points. That's something that we could probably talk about. And actually, I'm gonna get with you on that, because like, I really do want to raise awareness on the damage that social media does to our psychology. Like, we're not the same people that we used to be before the internet, right? We don't do the same things. We don't remember numbers unless you're from the old school. You know, your grandma still keep a phone book. Like, we don't know numbers by heart no more. We don't know addresses. We don't know our own city or how to get around our own city. And there's just so many things we could talk about that social media and the internet, is doing to us. But that wraps it up for this call, y'all. It's 8:50. We're gonna go ahead and end it early. I hope everybody enjoyed the call. I hope y'all got value. I will post those charts on my page like I did last week. And I will see you all next Monday, right? Next Monday for Markup Mondays. And for everybody in Snipers Anonymous and the Sniper Gang, I will see y'all in the chats on the charts. And remember to always stay safe, but stay dangerous. Peace.